The year began with pageantry and pyrotechnics. Vladimir Putin savoring the moment at the pricey Sochi Olympics. At an estimated $50 billion, it was the most expensive games ever.
If you look at the year, the way it began, it seemed that Vladimir Putin was riding high. Oil was at, I don't know, well over $100 a barrel. He had planned the Sochi Olympics. It seemed like a grand success.
Soon after Sochi, it was all downhill for Russia's relationship with the West, as revolutionary Ukraine descended into chaos. Kiev became a battlefield. Pro-Russian President Viktor Yanukovych fled the capital and office. Then Russia annexed Crimea. An outraged President Obama announced sweeping sanctions.
This is not our preferred outcome. These sanctions would not only have a significant impact on the Russian economy, but could also be disruptive to the global economy.
To this day, President Putin refuses to break with the pro-Russian separatists in eastern Ukraine. And successive rounds of Western sanctions, totaling tens of billions of dollars, have taken their toll on the Russian economy.
The most important thing about sanctions is that right now they're preventing Russia from renegotiating its $600 billion in debt. That's a big deal because as the ruble starts to lose value, that becomes more and more oppressive as inflation rises.
The crisis in Ukraine took an even more grave turn when Malaysia Airlines Flight 17 was shot out of the sky near the Russian border. Ukraine says it was a Russian missile which brought the plane down. Russia and the pro-Russian separatists in control of the area denied responsibility.
That was perhaps the point of greatest arrogance that you saw in Russia, where Putin didn't even bother to try to explain or apologize for any of this. In a sense, he was saying, stuff happens, this is a dangerous area.
The situation was bad, and then came the oil shock. Since June, the price of crude has fallen more than 40%. It's delivered the 1-2 punch to a Russian economy that was reeling from sanctions.
75% of its exports depend on oil and gas, so it's basically a petro-state. You have a petro-autocrat at the top of it, and so when oil prices fall, things tend to collapse.
As oil dropped, the Russian ruble fell in tandem. And a desperate round of central bank interest rate hikes failed to strengthen the currency. It hit record lows. Many Russians rushed to buy foreign imported goods as the ruble fell. So far, they're standing by Putin. The issue, of course, is for how long?
They've been looking more and more like a submerging market, not an emerging market, while Putin's popularity within Russia has only increased. And clearly, as we close 2014, the disparity between those two trends is an absolute chasm.
At his year-end press conference, the Russian president said the pain would be temporary.
This situation could continue approximately, nobody can say exactly, for 2 years. The situation can improve sooner, even the first or second quarter of next year.
Putin says the Russian economy needs to diversify. That will take time. Russia needs a rebound in oil in 2015.